tax returns across, like I always use my one client, 17 LLCs, and they have a ton of money or they have the ability to bypass a lot of this. But when you have that, you need to kind of understand who can I go to from a lending resource that we can keep a lot of either their company income or their personal income out of it, and how do we make it more property based versus person based.
Hi, everybody. This is Andrea Gordon, and I am really excited here today to have Aaron Marsh with me. He's in mortgage, and we'll talk about that with you in just a little bit. But as you know, I started this podcast because of the NAR DOJ lawsuits and the commission lawsuits because I got really angry. I thought, wow, I'm being disrespected profoundly here. You know, after a 30-year career in real estate, I feel like no one understands what it is we really do. So I thought I could be angry for years, or I could create a podcast that would educate the American people as to the variety and the extreme parts in which real estate affects all of us in the United States, how all of our economy is based on real estate, how most cities are completely funded by transfer taxes and varying taxes that have to do with real estate. And so, to that end, I've been bringing people on from all walks of real estate life, including Aaron, who's here from his company. Now, the name of your company is
Marsh Lending.
Marsh Lending. And why did you name it Marsh Lending?
So that there's a story behind that. So
I
when I
knew
decided to
it.
do my own, right, because I
Mhm.
felt like there was a better way based on my background, like 30 years in corporate America, I needed like that, I needed that juice, right? That oomph, right? So I could have named it, we're located in Florida, I could have named it, Blue Ocean Mortgage, right? Easily, right? Putting my name on it is that extra little poke to get out of bed, get out there, hustle, make the right connections, continually grow your network. So like as my wife says, your network is your net worth, right? And so that's,
Yeah,
just like that's what drew me and got me with you today. And
excellent.
it's just continuing building, with shows like yours
Thank
and
you.
helping the people.
Thank you so much. Well, I found it fascinating when you described a little earlier in our conversation the quadrant and how you ended up in this niche market that you are in. So, when you are dealing with these high net worth individuals who are borrowing intense amounts of money in your area, is there anything different that you do than you would say with a regular mortgage? How does it work?
So a lot of times, because of where they are and how they accumulated their wealth, it's not just a straight W-2 and here's my 2 years of tax returns and they're simple 1040s and let's go, right?
Right.
So it's hundreds of pages of tax returns across, like I always use my one client, 17 LLCs, and they have a ton of money. They have the ability to bypass a lot of this, but when you have that, you need to kind of understand who can I go to from a lending resource that we can keep a lot of either their company income or their personal income out of it, and how do we make it more property based versus person based, right?
Hmm.
And
Hmm.
so in doing that, then you start to get into the business purpose loans, right? They're going to put it in an LLC or they're going to put it into a trust because they already have everything built that way. And then, so you have to understand what that is. And, you need to get that information in for underwriting early in the process. And then in terms of like the income of it and how am I going to qualify or check the box that yes, we'll go forward with this loan, we use a lot of alternative, everything you can think of non-QM, we're really in that space. So we use a ton of alternative qualification methods. CR would be one of them if they're going to do it as a short-term rental. If they're going to do it as just a second home or a vacation home that friends and family use sporadically throughout the year, or it's just an investment home for them, then we can look at like doing it based off of their personal financial statement or based off of like the property value itself, the asset, an asset based loan, or we can do it
Hmm.
from, their portfolio and it says, okay, they got X amount of money in the bank. They could pay for this over 5 years, no problem. We'll check the note. Let's get the mortgage going. What's the down payment?
Great. That's really interesting to me. And the question I have for you, you are in Florida, Alabama. and Texas. And there have been a lot of events that have to do with hurricanes and floods and weather
Yeah,
related issues in all of these states. Um,
right.
do you find it harder to find insurance so that these loans can go through? And what do you do to mitigate that?
So I think Florida is kind of coming on the back side of it, and in Texas is still a little bit into it, but Florida is coming on the back side of kind of what I'll call an accordion with insurance, right?
Hmm.
So 10 years ago, it was stretched. There was multiple insurance firms you could go with. They had multiple policy underwriters. There's a lot of people in business in Florida, right? A lot of
Hmm.
storms have happened. A lot of things have happened. That squeezed down. I would
Right.
say somewhere anywhere from like 2020 through up until late last year. Now it's starting to open up a little bit
Hmm.
because we're a few years away from, the multiple hits of storms in one year, right?
Hmm.
And also people are seeing it more as a fertile ground, right? So Bank of England, Lloyd's, people are starting to come back in and going, hey, we've neglected this area for 2 or 3 or 4 years, but we need to grow our top line revenue because we've neglected this. So let's go back in. And so we're starting to see a little bit of ease up on the policies. By no means it's gotten any cheaper, and by no means is it became much simpler, but there's more available as opposed to the two or three who stayed and then it made it really rigid on requirements.
Yeah, because where I am in Northern California, it's like a nightmare a lot of the time to get insurance. And a lot of the major carriers have completely pulled out of the area, and a lot of the smaller carriers can't actually back up their promises with actual cash. So
Yeah.
it's a tough thing. So just out of curiosity, do you love what you do? Are you passionate about what you do?
I am. And we got a couple of stories around why we do it, right? And so one of them I told you about the name because that's something that I'm passionate about. I put my
Right.
name on it. Something
Right.
I want to grow, right? So, but on the other side is, just helping people, right? Helping realtors grow their business, watching them, when we first had either our first cup of coffee or I met them at an open house or they came to one of our we're members of the Chamber of Commerce and I'm an ambassador in it. So I teach a lot of classes. I do a lot of community events, a lot of ribbon cuttings, that kind of stuff. So from our first meeting, helping them close some deals to watching them kind of grow and now getting their own team, right? So,
Mhm.
so, all that stuff, there's some intrinsic value in that. So yeah, I definitely do like it. Did we do a lot of big and great and scary things when we were in corporate America? Yes, but that was under the corporate company's nameplate. It wasn't anything that was attached to me. So,
So this is something that you're building. This is something that will be your legacy. How many people work for you?
so currently we're at just under 10. We have 8.
And are they all people that are involved in mortgage, or are they also administrative staff, et cetera?
So we have 2 LOs besides myself.
Hmm.
And then we have a team of processors that handle that. And then we have like the world's greatest LOA. She's just awesome. And so everybody's remote. We have a couple of people located here and then on the east coast of Florida. I'm in the northwest corner of Florida. And then everybody else is remote and it works out really well.
Are you from Florida?
No, I'm from Texas. I'm a longtime Dallas guy.
Okay.
Yeah.
I think I can hear that in there somewhere.
Okay. Yeah.
So
Yeah.
what do you do to decompress? How do you, because this world, I mean, I don't know about you, but this season for a residential real estate agent is crazy. I mean, I'm working easily 12-hour days every day. How do you get time off? How do you keep yourself refreshed to the point where you can be fresh enough to deal with all the people you have to deal with?
That's a great question. And it's probably one I should ask myself more often. Because, I'm having to do a lot because I try and do my best at either adding software, AI programs and processes to help take pressure off of our system, people that work on our team. I'm constantly, if I'm not meeting realtors and brokers, if I'm not doing either a lunch and learn or a class at the chamber or podcasts, then I'm constantly strengthening our partnership. I'm constantly looking for more capital. Who are better family offices that I can get with it, want to partner? Who's sitting on dry powder right now for the commercial market that wants to get involved and start getting duplexes, quadplexes, multifamily apartment buildings, that kind of stuff. So I'm constantly in a lot of different areas.
Okay, so you're a workaholic, is what you're really
But
trying to
no,
say.
no, but I live by the beach. And
Mhm.
so I kind of take Sundays to myself. So it's golf in the morning and then go because I can't play football and baseball anymore. I'm too old. But it's golf in the morning and then to the beach, with the family and all that kind of stuff. So that's a great decompressor just to listen to the waves. It's really nice here. It's sunny. Our beach is awesome. You can go for walks, read books, listen to podcasts, just kind of just turn it off.
Good, good. I'm glad to hear that you're getting some relaxation because it sounded really crazy busy from what you were describing. Uh,
Yeah.
so, what I would say about, do you have specific banks that you go to, or do you have a bank?
No, we don't have a bank, but we have great relationships with, we have like, I call them our golden dozen, but every
Hmm.
once in a while, the people on our team call it our dirty dozen because, it's just not, it's
Uh-huh.
the bad underwriting week or something,
Hmm.
right?
Hmm.
But we have about a dozen partners that are probably push one, right? First call, hey, here's what this, we just got this in. These people have a contract, got to close in 30 days. It's a $3.5 million house. They're going to do short-term rental. And this is where I think we can set them up. We're going to do a DSCR for them. And then we can walk through
Explain
that.
DSCR for my audience.
Okay, so in the kind of investment property business purpose loan world, there's something called DSCR, which is debt service coverage ratio. And it's really easy if you just think about it in a seesaw. So on one side of the seesaw, you have your debt on that's directly related to the property. So if you just take your top four, so it's your mortgage payments, so your P&I plus your interest, so plus your homeowner's insurance, plus your property taxes, and then homeowners association if you have any
Hmm.
condo association. So you add those four together. Rough math, let's say it's 5,000 a month. On the other side, there'll be some different assessment tools on what this could rent for, whether you do it as a long-term rental and you have a 12-month tenant or a 24-month lease in there, or if you do it as an Airbnb and
Hmm.
you do it as short-term rental. But let's say those rentals come in at 75,000 a year, gross rental, gross amount. So now I'm at 5,000 a month or 60,000 a year in debt. And
Hmm.
because my rental clears the hurdle, the
Hmm.
seesaw balances on that side. So that will check the loan, and we haven't looked at your W-2s, we haven't verified your employment, we haven't pulled any kind of income tax, right? We haven't asked for any statements. And so really we're off to the races. We've qualified the loan. It's now a business purpose loan. And now we get into the next stages of closing.
Okay. Okay. And when you are doing these loans, let's say you have a high net worth, you're laughing. Is that because of my
No,
question?
no, I'm happy. I'm just
Oh,
excited.
good. When you're doing these loans and you have a high net worth individual, but that person is well over leveraged, what could you do to help them?
So if they're over leveraged in their other properties,
Hmm.
there's a couple of different things that we can do. We can get them into everything from just looking at the property itself and saying, okay, we have a firm that will go up to, as long as they have proof of funds to close, right? And they can come up with some down payment.
Yeah,
So we'll go up to 75% LTV on this with one of the banks that we work with, right?
got it.
And then that's typically on like an ARM product. So it's a 3-1, 5-1, 7-1 ARM product. All the way with various different banks and types in there, all the way up to hard money. Now, hard money isn't cheap money, right?
Yes.
But what a lot of people do, let's say there's an investor who is, like you said, over levered. They own a big office complex, right?
Hmm.
And they want to buy this property over here. Well, they got this one on sale. Sometimes we'll put them in a hard money loan. Now it stings at first, right? But it's an interest only, it's a little bit higher interest rate. But there's going to be a few points on the front end to get the deal done, but it puts it under their name or their LLC. Now they have ownership. While this thing sells down, and this may be a 12, 18, 24-month balloon, right?
Hmm.
When this sells, then that puts them into a better levered position that we can come back and then go to a bank with
Right.
much more normalized loan to value percentages and much more normalized interest rates and get them in a better position long term. You see what I'm saying?
So you strategize how to make these things work, and
We
that's
spend a lot
probably,
of time on that, right?
I would
we
guess.
we value ourselves as that piece. In fact, my MBA is corporate strategy, so I put a lot of that into this. But we value ourselves on that piece from me all the way down to the processing team. That everybody's consistently thinking about what's the best value add and what's the best strategy for our client, and are they in that? And or raise our hand and say, "Hey, here's something better. Let's run it by them, see if they like it." Because if you go to like your personal banker or your local bank or something like that, they may only have 5 or 6 products that they can try and say the proverbial round square, right? So round
Hmm.
peg into a square hole or square peg into a round hole, however it goes. And we're opposite of that. We have the entire wholesale marketplace. We'll go find somebody to do it for.
Now, you mentioned earlier that you're in 34 states. How do you do that?
So that's working with our lenders on the commercial and investment property. So, if we can, as long as it's not a state that requires, if you're doing a business purpose loan, so like let's say a DSCR. So let's say you wanted to buy a home in one of the states that we're not, it's not Texas, Alabama, or Florida, right? So let's say you wanted to buy a state and a home, I mean, a home in a state that you were going to rent it out, right? Or
Hmm.
you're going to visit as a
Hmm.
vacation home is if we can get you into a business purpose loan that fits that need, then we can handle that.
Got it. Are you involved at all in REITs or anything like that?
We're not currently. We have some partnerships on the other side that are doing a bunch of developing and they're in that. So if that's something that a client is looking for or a customer, then we have a resource for that to help them.
How often do you meet with your staff to sort of strategize and think about these different clients that have different needs?
We got to get better. The meetings happen pretty much daily. We have like a standing daily huddle. Now, some people can get on, everybody can get on. Some people,
Huddle from
everybody
from your
just hands
football
click.
background.
What's that?
Huddle from your football background.
Yes, yes. And so we have our huddle meetings and it's just for us to kind of everybody catch up. Is anybody got a blocker, right? So what is the blocker? We're still waiting. We've asked 7 times for the homeowner's insurance, the homeowner's person, so we can get it over to title and the underwriter, and they're not getting it. Okay,
Right.
we can jump in and help this process, right? And that kind of stuff. But as in terms of it needs to be woven better into we need to probably we're at a good point to do an entire process map, right?
Hmm.
Just kind of
Hmm. That's very cool. I love hearing about other people's business plans and strategies. I think about systems all the time. I'm in the second year of my PhD program,
nice.
and in transformative studies. And so I'm attempting to change the world one podcast at a time.
There you go.
But in any case, I love your humility. I love the fact that you're open and curious and you're not telling me this is exactly how it's done. I love that about you. Thank you so much for coming on my podcast today. I truly appreciate the time that you've spent with me. If somebody wants to get a hold of you and utilize your services, how do they get a hold of you?
Yeah, it's pretty easy. Our website is marshlending.com. And then we have all of we're pretty much on all the social platforms. So it's Insta, Facebook, Twitter, or X. And we have a YouTube channel, and all of those are at Marsh Lending. So that you can find a lot of good, useful videos there, especially if you're interested at all in learning more about short-term investment, DSCR's investment property. We have a ton of that stuff over there.
That is absolutely magnificent. Thank you so much for your time today. I truly appreciate you. You take care now.
All
Bye.
right. Thank you so much.
If you loved hearing from these incredible voices shaping real estate, you'll want to catch what's next. Click the video on screen to keep discovering more inspiring stories.